Before we jump into today's video, I just want to remind everybody that I'm not a financial advisor. So this video is for educational and entertainment purposes only and should not be taken as financial, investment, or trading advice. All investments involve risk, and you should do your own research or consult with a licensed financial professional before making any investment decisions. Just remember, past performance is not indicative of future results. I don't have a time machine, but thanks to YouTube, today we're going to jump back to November of 2020, and we're going to find out what Adriano was sharing with us on his channel, Passive Income Investing. Hey everybody, it's Paul here, and I'm trying to catch up on this series, so we're working a few months behind. But anyways, we are going to take a look and see what was hot back in 2020, see if it's still hot today, and if not, what would be a better pick for you and your portfolio. Keep in mind, this is not financial advice. We are just having fun tonight, and we're going to see what was selling at a discount, propping up the yields, and making it a more enticing investment back in November of 2020. So let's get right into it. We'll start with the first one. All right, so the first one is ticker ZWE. It's the BMO Europe High Dividend Covered Call Hedged to Canadian ETF. Back in November, the share price dropped down to $15.67, and it had a yield of 8.8%. So you can see today the yield is 6.68%. This has 35 blue chip dividend paying stocks in Europe and employs a covered call strategy. So I think this one here you could potentially still buy and hold if you wanted to. BMO is considered to be a little bit more conservative than a lot of other ETF providers, but you can see that they have $758 million in assets. So this fund is actually doing quite well. But I did pull a couple of other options that you might want to take a look at. So the first one is from Global X. It's their enhanced MSCI EAFE covered call ETF. The ticker is EACL. Now you can see right now the annualized distribution yield is 9.52%. So it's going to be a little bit higher than the BMO one. Let's take a look at this. Reasons to consider EACL. So unlock the growth potential of 750 plus large and mid-cap companies across developed markets, including countries in Europe, Australasia, I don't think I said that right, and the Far East with EACL, which uses light leverage of 25% to enhance growth potential and yield. So if you decided to go with this particular ETF, I think the benefits are you're getting much more diversification with 750 stocks as opposed to 35, and it's using some leverage. So you are going to get a higher monthly distribution. But if it was me, this is not the one that I would pick. I would be leaning more towards Evolve's eBank. So the Evolve European Banks Enhanced Yield ETF. So the ticker is eBank. The NAV currently is $15.92. Let's see here. The trailing 12-month yield is 11%. It holds, the number of holdings is 20. Let's see if we can find I want to find the performance for this ETF. Here we go. So if you take a look at the performance in the past year to date is almost 62%. So if you had bought this in 2025, you would have done really well. Past 3 years is 35.95%. Anyways, guys, that's two options that you have to look at as opposed to buying ZWE, which I still think you could possibly buy today. So the second ETF that Adriano was talking about in November of 2020 was HMMJ, which is the Global X Marijuana Life Sciences Index ETF. At the time, the price had dropped down to $5.95, and it had a yield of 13.95%. Now, I held this fund up until just recently, and I missed the boat on selling it when it was around $17 or $18 a share. Held onto it thinking like everybody else that it was going to go higher, and it didn't. It tanked. They actually did a reverse split. They cut the distribution. So you can see now, if you're still holding it, you're getting a 1.46% yield. So back then, they said the reasons to consider this fund. HMMJ seeks to closely replicate the performance of the North American Marijuana Index. This index is specifically crafted to offer exposure to a diversified basket of North American publicly listed companies heavily involved in the marijuana industry. Anyways, for most of you who are into investing, you know that most of these companies have not done well. The whole sector hasn't done well. And as a result, most of these stocks are worthless nowadays. This is a thematic investment. So I decided to look for a more current, a more recent thematic ETF that's doing extremely well. So even though I'm not a big fan of YieldMax, here's YieldMax's Chippy, or CHPY. It's their Semiconductor Portfolio Option Income ETF. So we all know why choose this fund. We've looked at this before for a weekly income potential, diversified portfolio, and growth opportunity. Distribution information, you can see it's 45.27%. Let's go down and look at the performance. This is what we really want to see. So the 6-month performance is 24%, and since inception is 48%. I happen to know that this fund has been paying really well recently, I believe between 40 and 50 cents per week. And also the share price has grown a lot. But keep in mind, this is a thematic investment, and they are cyclical, or they can be very strong for a while and then suddenly drop off. So you have to be careful with these type of funds. So the last fund that Adriana looked at was Melcor REIT, MR.UN. This no longer exists. It was kind of swallowed up by its parent company, and all investors were paid out. I believe at the time it was $5.49. This is what they were paid out. But anyways, I'm not a big fan of REITs. The few that I had left between my wife and I were Innovalis and TNT, both down considerably. I think we're down 70 to 80%. So lost a lot of money with REITs. But I think if you want to avoid losing money, the best thing to do is jump into something like this. So here's Hamilton's RMAX, which currently has a yield of 10.68%. And let's look at the highlights. 10.68% with monthly distributions, diversification beyond single stocks with exposure to the largest REITs in North America, flexible coverage ratio adjusted to achieve target yield and preserve upside, active cover call strategy managed by an options team with 50 plus years of experience. So a good fit for investors who want higher monthly income, exposure to the largest REITs in Canada and the US, with diversification across subsectors. It's tax-efficient distributions and reduced volatility from options strategy. So there you have it, guys. Those are the 3 picks that Adriano had back in November of 2020. You can see that 1 out of the 3 is still potentially an option, and the other 2 have kind of like gone by the way of the dodo bird, and no longer something that you could either buy or I would suggest buying. Anyways, guys, I will try and get out the December 2020 video as soon as I can, just so we can try to catch up, because it's now January of 2026. All right, guys, I hope you had as much fun as I did with this video. Nothing too serious, just for fun. And until next time, bye for now.